The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here, Tiger Technicians Hour on the 17th day of October. My pleasure to be here, and as the charts are populating, there it goes, or it should be there in 1 second. Let me just say a couple of things about the market as it stands right now. All-time highs in most of the indices, and it's getting harder and harder to do it. But as there's a pullback, so you get United Technologies, so UNH, which is UNH Healthcare. So what we're talking about is that as there's about to be a pullback, just a natural breathing, boom, you get a rocket ship to the upside. So that's what we're looking at, and it makes it a little difficult to say, right here we should get a sharp pullback. Certainly we can keep talking about some kind of consolidation. But wait a minute. The Dow is up 22 at 22,980, just a whisker away from that 23,000 level that I've been talking about. And blank screen. Yep, I know. There it is. Everything's set. Here we go. Charts should be good. You got a black chart. It'll be 1 second. It'll populate. I love that word, populate. Can you refresh? No, I don't need to do anything. I think you'll see it within 1 second. Here it comes. All right. So the Dow's up 23 at 22,980. The S&P is down 1 at 2556. This is going to be very interesting because the volatility index, the VIX, is up 44 cents at 10.35. And I said to subscribers this morning, I think that we're looking at the VIX index being really close to some kind of an upside, at least a pop-up. Yeah, black chart is coming. It's coming. I don't know why it's taking so long. It'll be there. Here it is. You see that the hourglass is popping in and out. And here we go. 1, 2, 3, 4, 5. There it is. So we've got the IYT. That's the iShares Transportation average down 0.72 at 176.650. Made a rogue wave, Chapman wave, rogue wave, 181.57, all-time high on the 13th. It made that down arrow peak F top right there on the 4th of October at 179.99, pulls back. MACD turns down, stochastics very weak, and then you get that isolated spike to the upside. I call it a rogue wave, and boom, it goes to a new all-time high at 181.57, and the expression is it hasn't looked back. It hasn't been able to look forward. It's only looking back, and that is the high for now. Now, this is going to be very tricky because I could give it some alternate count for the weekly chart. I'm just going to stay with it right now as being a leg C, probably a peak C this Friday, which says there'll still be a D to come, leg E in the monthly chart. But this is really important. Why? Because the transportation, it's really important to have the transportation confirmed. This is the old Dow theory, but I like it only in the fact that when you've got transports confirming a Dow industrial all-time high, it's really good because it means that the infrastructure is working, that businesses are shipping, that the manner of which you transport various goods is alive and acting very well. I like that. Right now it says just be a little careful. It's a hint. It's a heads up. Okay, now let's go to all the numbers. Dow is made a new all-time high today, 23,002. What I said to subscribers to my opening call this morning is that I'm looking for the 23,000 to become extremely strong resistance. And if there is anything going to happen today, the area between 22,990 and 23,010 is going to be very important. So let me just edit this and put in 23,000 for the first time in history. right there, and 23,002. It just squeaked higher. It still could go a little higher. I'm getting more and more, becoming more and more convinced that this whole 23,000 area is going to be strong resistance. 22,000 just went right through like a hot knife through butter, and this one is going to be a tougher one. All right, here we go. The parameters to watch: if there is a spike between now and Thursday to the 23,075 level, I just have to say, you know what? We're going to be going higher because there's a record to break, and it's within days of breaking that record. That is to go so many days without, I mentioned it yesterday, the 3% correction. Has it even had a 2% correction? And so this is on track to be able to do that. I think we're getting really close to at least a consolidation. I've been saying that for a while, but if you look at it, we really haven't gone very far since I've said this. It's only like maybe 200 points higher. Big deal, 200 points. It's taken time, it's taken energy to do that, but it has gone higher, and the stochastic is still at 96%. On balance volume is extremely overbought, and the MACD is still very good. Hasn't turned down yet, but the histogram is turning down. Now, S&P, let's go through that. I was asked if I would go through different parameters. SPX, that is the S&P 500 index, trading at 2556.44, down $1.20. Look how long it's taken to go from the 25, 29, 23 high of the 5th of October to here we are on the 16th, and less than 2 weeks of trading days, and we've gone to 25.59, 30 points. That's really not very much when you consider the vertical moves that we have had. It's taken a lot of time, a lot of energy. I think it's running out of energy. That's my belief. That's one of the reasons why, for my opening call subscribers, for those who are fortunate enough to still be long, the diamonds from the 22,300 area, they still long. Very short term, we've got a short position, small short position on the Dow. We'll see how that's going to work out. And in the meantime, S&P parameters are closed below 2547. It's at 2556 right now, 9 points lower. It says, starting that consolidation, and a punch in the 2563s says, whoa, that is really good action. All right, I think it's going to be the former. And here we go to the Qs. New all-time high today, 148.89 was the high yesterday. Today's high is 148.95. So that's giving the parameters of 148. I would say 140, let me just be very clear, 149.35 to 149.47. I would say strong resistance. And on the downside, in the next week, a close below 147.20. Let's make it 147. A close in the 146 that says, we have now started the consolidation in the QQQ. The weekly chart is still good, and we're going to see on Friday whether the stochastic is still in the 94% area and the MACD is cross positive, because that's going to say there is still room on the upside. Hard to believe, but that's what I'm looking at. So now IWM, which has been the laggard, still the laggard, trading at 149.47, and that is very interesting. It's up 23 cents. So let's just see. Would you rather have at 148.79 the QQQs or at 149.47 the IWM? We'll talk about that in a moment. Basil Chapman, Tiger Conditions Hour, Dow's at 26, S&P's down just a little bit. We'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So the question is, at this exact price, would you rather have the QQQs or the IWM? Well, the IWM has been weaker. You see the way the MACD and stochastic have pulled back on balance volume, that blue line right there, very weak in the daily. The weekly is still very strong. And it has a spiral from 134 to 150, almost straight up. Single leg. The QQQ series is a little different. Where did that go? QQQ right here. 1, 2, 3. Worked very hard to get to the 148.89 high of yesterday, and then a new high today, trading 148.78. Choppy weekly. Going to probably be a leg 5 in the Chapman Wave weekly chart, and only a leg C in the monthly. So if I was to choose one or the other, if the SMH is the semiconductor index suddenly starts to really take a hit because maybe it's a little too optimistic to think that Lam Research, which has just been an incredible on an incredible tear. Let's see, trading right now. So SMH is at 97.36, down 35, didn't make a new high. Yesterday's high was 97.71. And Lam Research, I try to count this as many ways as I could. I still get this as a leg C, unless this is a Chapman Wave instant, unconventional flat-based instant restart, which says, watch out, because if this is ABC, a leg D to the upside, and there is a turn down that takes it under 188 in the next week and a half, there could be a very quick trip down to the 170 level. I don't know. I'm going one step at a time. All I'm saying is this is incredibly strong in all time frames. Near term is just somewhat overbought. The unbalanced volume suggesting it's very, very close to some kind of at least a sideways move. So that's LRCX trading at 193.10, up 74 cents. Now, let's just do this quickly because Goldman Sachs came out with earnings. They seem to be very good. I didn't hear them. I'm just looking at the chart. Made a peak D right there around about the 8th of October at little doji candle at 240. So this is the 6th of October, 247.07. Jumps today from the lows of the 237s. It bounces all the way to 245, just under 244.89, and now it's down at the low of the day of 237. That's going to impact the XLF, and it has. Look, the XLF had a bit of a rally, pulling back, holding the 9-period moving average, also had a peak D. If you look at Citibank trading had a peak E rogue wave. In other words, everything was turning down, but it still spiked to an all-time high. It went to 76.14 on the 12th, and now it's trading down in the 72.35 area. This seems to me that Citigroup could be having a digestive phase right now. And the next question I had was, let me get to it. Where was the question? Morgan Stanley, also in the financials. Morgan Stanley, bank stock, financial, makes a rogue wave, a leg E. Oh, there are so many of these things. Yet the weekly chart is still in a G/C, and it's a monthly leg D. I have to tell you, the more I look at the financials, there are a couple that are doing very well. We're still in our bank stock, and it's done extremely well, holding very nicely here. But I'm beginning to say, I think that the financials have a little bit of a problem, and that leads me to the TLT. So the TLT trading at 125.79 made leg C today, and that's what I've been looking for. I've been saying, I believe from the very intense work that I did over the weekend, showing all these different charts, I said, I believe that based on my weekly chart, the TLT looks to me like it wants to rally a little bit more. Yields want to come down a little bit, and that's contrary to what a lot of people are saying, but that's the way I'm looking at it. And as it stands right now, the TLT is up 3 cents at 125.79. So that takes me to gold. Gold right now is down 16 at 112.86. I've been talking about this for a while. I said that the rally that unfolded in the stochastic and the MACD seemed to me much stronger than the actual move to the upside in the price, and it made me very suspicious. And the reason why we remained long from our buy of the dollar right at the 36-week low, the exact day of the low, is because I believe that the dollar is finding internal strength that most people don't seem to be talking about. I keep listening to it. Most people are saying, the weak dollar, weak dollar. No, I think the dollar has a chance now, after a massive move from 103 down to 91, for a currency to do that. That is 12 points. That's about 12%. That is a lot. So I'm thinking that the dollar has a pretty decent counter-trend rally, could retest the 94.27 high that was made on the 6th of October. It's going to be very important to see what happens with the dollar over the next 2-3 sessions. I would say going into Monday. Look at the USD JPY. This is the dollar yen, US dollar Japanese yen currency pair, holding nicely, not doing anything great, but the weekly chart is saying, hey, this is a very nice pullback after such a big move to the upside, trading at 112.29. It needs, though, to go to that leg D above 113.43. That was the high of 6th of October. So we'll be looking at that now. If you go to the Euro, EUR, USD, the reason why I spoke about this the other day, I said, I'm looking at the same thing in the Euro. The rally looked to me like it could be a single leg A to the upside. I'm not happy with the Euro dollar move. I think that it was based on something that I don't see structurally, because the weekly chart is still very weak, and I think it's going to test 1.163, and it's at 1.175 right now. So I still think the dollar is going to have a decent run, and it's going to surprise a lot of people. And if yields sort of stay down a little bit, it's going to make people say, "Whoa, wait a minute! What happened to the Fed hike in December?" Well, I'm not sure about that Fed hike in December just yet. Although I do see signs everywhere I go. I'm not seeing now the CVS's and Dunkin' Donuts saying help wanted. Now I'm seeing, big companies saying, with a sign out front saying help wanted. That I haven't seen in a long, long time. What was the next question? Low volume and lower volumes in fixed income. Let's see. How long to stay away from TLT? Stay away? No. All right, the question is, would you buy TLT right here at 125? I would buy TLT at 125.78, but I would absolutely have a stop just a penny under 125. So 124.99. Why? Because it's got to move now. It's got to do it right now. You've got to see the TNX which is the 10-year pull back, and you want to see it underneath the low of 3 days ago, underneath 2.273%, and it's at 23.07 right now. And the weekly chart just looks like it's going to be pulling back a little bit more, and then we'll have to see what happens. Next question was, let's see, Morgan Stanley high of the day last seen 2/11/2007, almost 10 years ago. I know, isn't that interesting? Look at General Motors. The last seen in the 45s back in never. But of course, this is a chart that started fresh. So General Motors, if it goes back, it's one of the few stocks that goes back to the 1920s, just like General Electric. So that's a little unfair. But yeah, General Motors getting a little toppy here at 45.47. I'll be back. Dow's up 21. Basil Chapman.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so let's go. So we went to gold, down 16. Went to silver. We're going to silver right now, down 0.34. Peak B, and it pulls back sharply. I showed you the dollar. What's really important, let's look at crude oil. Crude oil was moving quite nicely to the upside, giving back some today, down 49 cents at 51.38. I believe that there's a good chance that we should still try, at least try today. I tried yesterday, not today, to make it to the 52.87 level for a D in the weekly chart. But I must emphasize that at 51.38, if there is a close under 50.40, so $1 lower, a close below that, and then you're looking at that H pattern and it says, uh-oh, arch formation in the weekly chart as well as the daily. Be careful. And that's what I've been talking about for a long time, that the monthly chart says the lowercase, look at this pattern. I drew it in a year ago. The lowercase h in the Chapman Wave methodology, if you know my CD book introducing the Chapman Wave methodology, H can go to a lowercase h can go to a lowercase m, and just keep persisting that way until there's a test of the left side low, break below it, and then you might get, like you got right here, a fantastic move to the upside. The lowercase h in the euro dollar monthly back in 2015 to 16 went from an H to a lowercase m pattern, had a test of the low by breaking below it, not closing below it. MACD was improving all the time into 2017. Stochastic turned around from 20% and started to move up. And then it takes you not just higher, it takes you above all the arches. Then you got to be careful. And that's exactly where we are right now. Euro has had its big move. It's just, it needs, after months of this, it just needs some rest. So let's go on, and we're going to look at copper, high-grade copper, HG. Looking at peak D right now, I think that copper has made its move, and this is one of the reasons why I think putting the whole package together, you know what, I haven't put the package together. Let me take it. Yeah, we've got a moment. I'm going to do that. Let's go to my usual charts right here. So this is what I show my subscribers every day. I go to every single different context that I can to be able to decipher. I'm saying to myself, do I need to do 4 charts saying the same thing every single day? I don't know if I can keep that up. I might have to just drop one of the charts. I don't know which one to drop because they're all so important. But it's more than that because each one is 2 charts. Look, this is the Dow daily without the MACD and stochastic, with the MACD and stochastic. Leg E goes to 23,002 today. Extends. I had the 1-to-1 extension. One of the reasons why just about over here I decided that we would start a short position last Thursday is because everything about the chart, especially with the small candles, was saying this is becoming somewhat overbought. 23,000 has been my belief that it's going to be a very strong resistance area. I want to get a position, and it might be one where we have to sit back because it go a tad higher. But I do think that we're going to consolidate. Look at this good candle so far again today. MACD is still good, very good, but the histogram is still starting to come down. That means the distance between the 9-period differential and the slow-moving average, the red and the green's narrowing. The on-balance volume is just overbought, but at 96% in the stochastic, you really have to drop into the 80s before you're going to see any real damage. And if you look at the 120-minute chart, so if you're looking at the 120-minute chart, I've got it as there's an alternate count. But at this point, I am calling it a peak C. I think there's a chance for one more spike to the upside. It doesn't have to happen. This is a complex move right here. But I think that, and it is a Chapman Wave 5, but I haven't got a conclusion to the 5 yet. So I'm just looking at the 120-minute chart. The MACD did cross positive, and I said to subscribers, what happens here is important. If it deflects lower, because there's a down 120-minute bar, that's going to be negative. But if it moves higher, I have to say that's good action. And a stochastic at 93%, that's good action. So we're watching this very closely in the meantime. So I wanted to go through that to show you the context in which I'm trying to put everything. And I'm trying to say to you that at this particular point, could be totally wrong, but I do believe XLK, there are a couple of key sectors, and peak C, so there's room for one more pop to the upside, I think. And then we've got to be real careful. And that would take us right into a record number of days, all-time record number of days. I believe we just need another 2 without a 3% correction. I think there's a good chance of doing it. There's just so many people that are just wanting to buy. So in the meantime, back at the ranch, what we're looking at is the S&P Select Tech Spider Fund. Leg C in the monthly is still very bullish. Leg F, maybe it's an alternate count. I'm calling it F for now in the weekly. And a peak C with a D to come in the daily with a stochastic at 95% and the MACD still strong. I suggest it's just room enough for a squeak to the upside from here. But at this point, we're getting real close to some kind of a pullback. Hey, could be wrong. Of course, anybody could be wrong. But look at the VIX index, big spike up 44 cents at 10.35. And sometimes that's a precursor to a move. So I mentioned yesterday that the technicals in the VIX index was starting to improve a little bit. And what's really important about this is that the MACD has gone to a very positive histogram. And the stochastic has been rising. And the price hasn't taken out the high of the 10th, which is at 1066. If there's a move in the VIX index above 1075, 1148 is a 200-period exponential moving average that will become a target. The day is young. There is still, every time you close your eyes and then you open them again, the Dow's come back after looking a little bit poor. And that's, as I said before, the UNH is United Health Group. A big part of this move, the culprit, as we say in the lingo. Now, I want to do something else. Yes, there it is. Within the context of the various markets, and if you look at the different sectors, SLX, the steel sector, trading down again today. So it goes up and down, just chop, but actually making slightly higher highs and slightly higher lows. This is very important because it tells us the same thing that's going on in the general market. When there is a weak sector, some other sector that has been weak takes its place. We saw that in the IBB just the other day. Market was starting to just chop a little bit. Bam, IBB goes from the 330, actually 328, screams up to the 342 level. Why have I not decided to short it just yet? I know there are a couple of people and some subscribers independently had looked at the PIGD and went short. I don't know if they're still short from the spike yesterday. I think there's just enough residual strength to say, you know what? We might have to wait a little bit longer before you can actually get some kind of clarity, because you've used up a time, one more segment of weeks that have gone by where the IBB has just really gone sideways. So it makes these stair-step moves, goes down to sideways, bam, new high, a recovery high. Sideways, bam, on the weekly chart, makes a new high. Now going sideways again. I don't know if I'm seeing it as a short at this particular time. If you are short and you're still looking good, I say just tighten up your stop, make sure that you aren't going to be trapped. And that's what the IBB, the iShares of the NASDAQ Biotech ETF tends to do. It just does that. So we've got a break coming up. Basil Chapman, Tiger Ignitions Hour, and I'll be back. Dow's up 19, S&P's -1. What a fascinating market. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. I was asked about the S&P Select Energy Spider Fund. It's the ETF called XLE, trading at 68.17, down 12 cents. Look at this sideways move. Keep your eye on the left. Just look at this chart. This is the daily, weekly, monthly. Look on the left. Keep looking. Keep looking. You see these sideways moves? See this? This is the IWM. Let's go back to the XLE. So slightly different, but what I wanted to show is that sometimes you can go sideways in an ETF or an index or a stock for quite a while. In this particular case, it's definitely an oval formation. That's different to a rectangle, and the oval formation has an implication. At this point, there is still a chance that it can have one more pop to the upside, and then it'll come back down into the middle of the range. 68.94 will start that move to the upside. But if you look at the way that the MACD and stochastic have pulled back sharply, as well as the on-balance volume to a certain extent, and the price is held, remember, if you have a balloon and you're watching it closely, and it's just sitting there at a certain level, and the wind suddenly dies down, and the balloon doesn't really pull back very much. When the wind comes back or the current comes back again, how high does it go, or does it not go very far? Is it stuck in a range? That's really the issue right now. Is the downside pressure and the upside pressure about equal? You just keep it going sideways? Well, it's real simple. The weekly chart, you have to move to another time frame. The 120-minute chart has already gone back and retested in the arch formation. So it's saying the upside is really limited at this stage, unless there's a news-related spike that takes it into close to 69. Most importantly, if you look at the weekly, it's a single leg A up. It actually went to B, but it looks like a single leg A. And now it's stalled. The MACD is good. The stochastic's at 90%, and that's good. So what I think is happening here is that the energy sector is holding well because crude oil has held quite well, and there are other factors involved. And basically what it's saying is, I'm not quite ready to break out. This is a Chapman wave stalk leg formation. If it does break out, it should go to the 69s, but it should do that, I would say, no more than by Friday, what's today, Tuesday? No, Tuesday, Wednesday, Thursday. By Thursday, the latest. It should spike to the 69s. If it can't do that, it's just going to continue sideways. But if it takes out 67.29, the 200-period exponential moving average, it's not a stalk leg formation, oval body formation at all. It is an arch formation, and it's going to go down deeper. My thinking is that's kind of what will happen over a period of time, but I think it's kind of stuck for now, and that's what I'm looking at. XLE, no trade as far as I can see. Now let's do something else. I was asked about GBTC, which is the Bitcoin Investment Trust. trading at 669. When it made that top, the peak F top, I discussed in great detail and showed my subscribers back on the 31st of August at 1,064. I said, good chance that if this is an F, it's going to take time and we could be pulling back. Someone said to me when I was at a meeting that I was the guest speaker, and someone said, where do you think? I said, I'd love to see it get cut in half. These things do that. And we all laughed like heck because there it is up in 1,000 when I was talking about it. Well, it did get cut in half. It went to 481 on the 14th, just about 2 weeks later. And now it's trading at 665. So I just see it stuck for the moment. I would love this as a trading vehicle. We every once in a while like to get some kind of a crazy trading vehicle. I don't see it right now. I had a question talking about crazy trading vehicles. I was asked about Roku. Well, Roku, we had a small long at 2380, got stopped out for, I think it was, I might be wrong, but I think it was an 80-cent loss. It might have been $1, but it was just the first experiment. It actually did move up, then it moved down, and we got stopped out. And now I'm just sitting aside. I think that was the only experiment I wanted. I don't like the action right now. It needs to build a little bit more of a base. The next thing that we're looking at is when we were talking about the New York Stock Exchange, NYA.X trading. There's the same thing. There's the oval pattern. This is a little bit different. I did draw an oval pattern in, but it's pushing it a little bit. This is really much. I wanted to show sideways, and I'm going to rather put in something like this. It has much more of an arch formation. That's another reason why I'm thinking that the upside is very limited. Doesn't mean to say the downside is a crash or anything like that. It says upside is limited. Let's see where the support starts to hold. And I don't think we're going to get a major sell-off until what about Snap? So, okay, Snap, I had a question about. Yeah, Snap is a little bit better than Roku just at this moment. And I at 16.23 up 16 cents. I'm looking at this and I'm looking at a flag formation. It could have little stair-step move where it suddenly spikes to a new high and then it pulls back. Suddenly spikes to a new high and then pulls back. Would I be trading it? I don't think so. Just give me another day. Ask me the question tomorrow. I need to see where. Actually, ask me the question Thursday. I need 2 days. I want to see if it breaks the support around about 1590 or if it breaks the upside resistance and can actually spike into the 17s for leg C. This could be an E/C. I don't want to mess around. I just don't see anything right now that is enticing to me to be buying it. It's had a nice move, but it hasn't had a strong enough move based on the MACD and stochastic and the weekly chart. I think it is trying to form a base from which it can move higher. I need a day or two to think about it. That's all. But I'm not dismissing it. I'm just saying I need a little time because I'm not having clarity right now for a position. That's what I'm saying. Okay. Next thing is I had a question about XOP. XOP is a dollar XOP. No, XOP is the Spider Oil and Gas Exploration. Yeah, I usually go to the OIH. That is the S&P Vectors Market Oil Services. No, wait. What do I also go to? Dollar OSX. Doing this by memory, so I could be wrong. Yeah, so the OSX has gone to a peak G in the daily. Look, D, E, F, and a G. And now it's pulled back. So many of these stocks and indexes have just gone sideways to down. They aren't breaking out. This is very select, the move to the upside. No, I don't see anything in the OSX yet, but I've got a feeling that not this week, next week, there'll be something very interesting, either on the downside or the upside, because it's used up a lot of time and energy. And the weekly, just like what we were looking at a moment ago, which was Snap. Yeah, using up a lot of energy. So same kind of chart pattern. No, all I can say is that I need a little time. I don't want to go out on a limb with this. I don't. So question about Goldman Sachs, look at that. That is an ugly candle. My contention has been that this fourth quarter would be where Goldman Sachs really has a sharp move to the upside. It's had the sharp move from 215 to 246. I think it needs a bit of a rest, and that's really going to be applying to most of the different indexes. Okay, wood, I showed subscribers over the weekend. Wood is screaming to new high. It's just gone to a doji peak E right now in the daily, leg E in the weekly, leg C in the monthly. Here again, I think it's so close to some kind of a consolidation. Folks, could be completely wrong. I think the upside is becoming so limited. The downside should be tested, but it's only short term in the dailies that I'm looking at the downside. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back, and let me just answer this question right now. At the same time as the doorbell went, everything's just going caboose there. Okay, there we are. E-money's down 225. I think it's going to be tougher and tougher. Yep, it's getting more and more selective, although when you look at the rotation, the fact that more and more stocks are moving higher is good, but it takes individual stocks to really move as an index up when the majority are starting to weaken a little bit. So we'll see what happens. Meantime, back at the ranch, let me just do this as a quick summation. I want to go through everything that I want you to look at it as if to say we are right now, and the VIX index is still holding it up 43. Let's just imagine that there's a move, Dow's up 20. Let's just imagine that more and more buying comes in by the end of the day. Dow closes towards the 22,995, maybe it even goes to 23,007. And the VIX index either stays above 10.10, let's say, it's at 10.34 right now, or it closes near the low of the day. That closing at the low of the day would be really disappointing. if let's say the Dow starts to pull back and closes the day minus 35, the S&P down minus 4.25, and the VIX index starts to move into the 10.44s, what does it set up for tomorrow? What does it set up if, say, I think it's this afternoon that Lam Research comes out with its with all the information. What if it says at 4:50, 4:30 this afternoon, whatever it is, Lam Research is a little disappointing. It's fantastic, but not quite up to expectation. We could gap down tomorrow, and that might be why you're looking at the VIX starting to move, because fund managers are saying, earnings, Goldman Sachs was supposed to be up 6 or 7. It's now, it's not doing very well. Maybe earnings are not going to be quite that great, so they're starting to prepare. And that's the reason why I want you to be in position right now. We'll see what happens. And all I can say is I'll be back later this afternoon with Tom. This is going to be a fascinating week because you've got the dollar rallying, you've got bonds. Bonds essentially are going higher right now. What's going to happen? What's the outcome? We'll discuss it in detail tomorrow. Have a great day. Thanks for being here. See you tomorrow. All
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.